Okay, I'll go ahead and jump into it. Welcome everyone to West Slope Startup Week. Go ahead and take care of a little housekeeping items real quick. So just a reminder that this session is recorded and the recordings will be posted to Sketch in the session descriptions, usually 1 to 2 days after the session. And a reminder to please mute your microphones and turn on your cameras if you'd like. It's always helpful to see everyone's face. And we will also, I have the Slack invite in the chat box. So if you're interested in hopping onto Slack after the session and furthering conversation or sharing any feedback that you have, that is in the chat as well. And then a thank you to our sponsors who make all of this possible, our title sponsor, US Bank, and all of our other sponsors who are listed on this screen that you see here. All right, so our session is the Toolbox Track, and this is Cash Flow, the name of the game, with Kelly Johnston from JFS Financial Consulting. So I'm gonna go ahead and hand it over to Kelly.
Awesome. Well, thank you so much for inviting me today. And the whole point for my presentation that I'll get sharing here shortly is it's deemed to be interactive. So as I talk about a subject matter, if you have questions, please chat it in the chat box. Nicole's going to help me keep an eye on that so I can be able to answer your questions for you. But today I'm going to take a little bit of a different approach to cash flow because a couple of you have actually been in on my classes before. So I wanted to give you something new and refreshing, especially knowing where we're going. So please, again, dive in if you have any questions in the process. So let me get my screen popped up here. We can go ahead and get started. All right, so the whole point today, well, first of all, I have to say the disclaimer because my attorney will get mad at me if I don't. I'm not giving you specific accounting or business or tax advice directly today. If you do need support with that, I highly suggest you reach out to your financial and accounting advisory team for you and your business or you personally. Other than that, we can continue with our presentation. So cash flow is becoming more and more imperative. I'm sure you all know that, especially looking at everybody's on the call today. Just because we don't really know where we're going. We know what we've just been through. But as y'all know, there's new mandates coming down. There was a mandate today about the mask process. Other states are going back into full closure. And so for me, I can't preach cash flow enough in the sense of it's where we're at economically. I personally don't think we've seen the full economic impact of what we've just gone through. And so knowing that, I really want to take the approach today about your cash flow and think about your goals over the next 6 months, your next year and 5-year plan. I always like to keep the 5-year plan in mind because even though you're making decisions knowing that we're in a kind of a flux of uncertainty, we want to make sure that the decisions we're making are not so drastic that they still hinder us from our 5-year plan or goal. So again, keeping that whole process in mind as I'm talking about the different strategies today is just going to become so very important for you. And cash flow is going to be more and more important because there was all of these different funding opportunities that came down the pike in the last couple of months that we've worked through. However, we don't know what those funding opportunities might look like, down the road. We're coming upon, the ending of quite a few of the different stimulus programs. And so as a business owner or as, professionals in the community, I personally am encouraging us to really analyze and look at cash flow, make sure we're still holding on and creating those reserves so that way we're prepared for whatever can come our way and making smart investment decisions accordingly. So I want us to keep that in mind as we're navigating all of this, because oftentimes, especially if you're over in Mesa County area, we've been open, quote unquote, for a while. So people are getting back to this normal swing of things, yet there's a whole bunch of uncertainty that can shift all of that. And so we want to keep that in mind. And as most of you know, I always like to start my presentation with the thought of why did you go into business? Because that hardcore why is going to still keep us driving forward. Because yeah, cash flow is super crucial, but you might have not gone into business for cash per se. I mean, you hope you want cash to support it, but your why might be autonomy or being able to share your passion with a community, whatever it might be. You're going to want to keep that in mind so that a way the cash flow can meet that intention or that why stronger for your business in order to help push you forward and support you in this process. I know we just concluded tax season yesterday, which was super awesome in our office. And looking at the tax returns that we did and looking at second quarter for 2020, like those strategies are even shifting. People that got the alternative funding methods and stuff, there's gonna be a lot larger tax bills due this year. And so cash flow is gonna be important to make sure you're covered for that. And at the same time, making good decisions around capital, employees, and that whole process. So again, really, really just wanting to keep all of that top of mind. So now's the time, because we're in the summer. You know, sometimes summer can feel a little slower or times to rev up. I'm encouraging people, let's roll up your sleeves. Let's get into your numbers. Let's look at what's happening in your business in many different ways and figure out what your numbers truly are. So I personally just did this exercise with my personal business coach. And, you know, I thought I know my numbers. I mean, I'm an accountant, so I'm pretty familiar with them, but the challenges that he put me through were really interesting. And it was, I now know my numbers, and I can sit there and say, okay, by bringing on this employee at this level of productivity, I can add X number of clients. Like I know the numbers to that well. And so in cash flow, it's the same game. So the first thing I'm going to challenge everyone on this presentation to look at is checking your income. And this is not just your regular revenue numbers. This is your gross income. And what I mean by that is taking your sales price minus your direct costs affiliated with whatever you're selling, whether it's a service or a product, and getting your gross number. I call it a contribution margin. And this is how much is contributed to the rest of your business per item or service that you sell. So that way you know how much is available to cover those overhead costs. And this is just super crucial, because what I thought my contribution margins were per different service lines were not exactly what they were after doing the deep dive analysis. And this becomes important because this is weighing the option of whether or not, say you maybe ran with a leaner team during this last couple of weeks. This is the decision-making process of, do you add another team member? Are they a direct related cost to what you're doing, or are they more overhead, and how does that impact those numbers? And this is also going to come into play when you're coming up with some additional strategies around cash flow, because these income numbers are just crucial. Gross income can also include contractual adjustments or bad debt expense. So like in a world that we're kind of in a state of, are we going to get paid from our clients or not? That's also something to really, really keep in mind. So I'm challenging all of my clients and friends and anybody affiliated with business that you really should know what those numbers are. And on the flip side of that is checking your expenses. And so with doing that, you can, I'm gonna dive into some specifics later where a lot of people lose track of things, but you wanna know what's everything going out the door for you cash-wise, and kind of look at some trends. Now's the time to take, a couple months of trends and saying, okay, where's my money really going? If you've ever sat in on a presentation of mine in the past, my philosophy is give every dollar a job. Every single dollar you have in your business should be assigned to go somewhere. And it's even the same for personal budgeting. My husband used to think I was crazy because I used to do the Dave Ramsey envelope system and assign every penny, like it goes into this envelope, and that's what he gets for marrying an accountant, I guess. But at the same time, like knowing where my money was going, it was so intentional that we were able to create pockets of wealth to be able to take advantage of market changes and have great wealth strategy. So, we recently went through another recession with the mortgage and banking kind of debacle, and my husband and I had the opportunity to buy rental investments during that period of time because we had built a budget plan, creating a pocket of wealth to be able to do that investment. So again, really wanting you to look at those different opportunities and things and in your business, because who knows what you can create with that. And there's lots of cool trends there. And then again, making sure every expense that you're doing is ordinary and necessary for your business. Now, I'm not saying don't scrimp and I joke with people about the coffee thing, because a lot of people are like, oh, just stop drinking coffee or going out to eat and things like that. But again, you want to make sure everything you're doing in terms of your expense has a really great return on investment. We have some resources I'll share later on in our PowerPoint that you can actually tap into that are free, like our podcast, and we did a really cool 30-day cash flow challenge that kind of dives into these in more detail. But again, you're wanting to make sure that everything you're spending your money on and earning your money on has intentionality behind it. The next thing that I encourage you to do to take those two exercises to the next level is to initiate the review and brainstorm process within your business. To me, this pandemic that we just went through opened up a whole nother level of entrepreneurship. I don't know about you, but like I'm kind of like the optimist in a lot of my circles, and I found it like I saw some true creative entrepreneurs come out of the woodworks during this process because they got to figure out like find a need and serve it. Like I can't explain that enough. I had a client that was a pottery studio became the new meal delivery service in their area because they didn't have one. But because she had the meal license and the liquor license, it worked for her. And it was just, she got creative in that space. And so now I'm not saying like do that whole 180-degree shift like she did, but it served for her. But take this time to check your service lines. Are there things that you're already spending money on that you can turn around and produce new gross profit margins with? I don't want you to like compromise your current business because, you know, Brian led a discussion on Tuesday with the pumpkin plan and wanting to have a kind of like a hedgehog effect on your business. But if it's in alignment with what you're doing and serving your current clientele, why not add it if it adds additional bottom line profit for you? So for an example, in JFS, you know, we do a lot around education and we spend a lot of time in our office studying accounting and tax code, which is just riveting, let me tell you. But we take that and I'm like, if we're already doing it, why don't we share it with people? And that's where like our Extreme Movement company was born, the whole educational platform we're doing. And it's purely because we're already doing the work. Why not just share that information? So what can you do in your business or in your personal life that you're already spending money on X, can it produce also Y for you? And then let's take that even further and review your current assets in your business. Over the period of the last couple of months, I've been doing lots of evaluations with business, figuring out cash flow and things like that. And so some of them, we've actually looked at assets that are just sitting on their lot that maybe aren't being used anymore that they can sell because somebody else needs them. And maybe it was to their benefit. For an example, we had a construction company and the assets that 2 or 3 of the assets that they had were actually costing them more in repair and maintenance than they were producing for the company. And so knowing your numbers around each, like again, every expense item, what that return is, can it help you? And so that's like actual fixed assets such as, you know, property, plant, equipment. But the flip side of that is also your accounts receivable. I know I sat on a call with Bonnie Watson with the Telluride Foundation, and she was talking about like, are people paying you on time? How is cash flow really working? What's that process looking from the accounts receivable aspect? Are you sending out bills? And now's the time to really work with people on this and work with them and negotiate. So for an example, if somebody can't pay their bill and you've already done the service for them, can't you work out a payment arrangement, getting $50, you know, a month or whatever it looks like? But again, it keeps that cash flow moving for you in the process. And then also, do you need a new policy in this time frame? I know a lot of clients and analysis that we've been doing is, you know, does your current policy serve you right now? And that is okay if it doesn't. You can make that shift. Just be fully transparent with your clientele. And we're going to talk about how you can leverage them here shortly in this process. Because I'm going to tell you, looking at most of the books of businesses we serve personally, accounts receivable is a huge opportunity and low-hanging fruit in terms of cash flow. And small adjustments in policy can actually create behaviors later down the road that can serve you. So again, trying to find ways of leveraging your assets in your business to be cash flow generating. And there's a lot more I can dive into here. And if I have time at the end, I can circle back to it. But again, everything you're doing in your business gets to have a really great ROI. I'm a big fan of Robert Kiyosaki's Rich Dad, Poor Dad. And if you read his book, everything about his is he's got the income statement and the balance sheet, and money flows in and flows out respectively. But if money flows into that asset bucket, it should flip right around and come back up and cover it right back into income for you. And I'm constantly thinking about every decision from an income and balance sheet perspective. Is this going to produce income for me and my company, which results in cash flow? And that's going to be more and more important as we experience different regulations coming down the pike that could affect our businesses. Nicole, do I have any questions, or am I okay to keep moving on?
Looking good.
Awesome. Thank you. All right. And then taking the accounts receivable conversation to the next level is reminding people of your value. Now, this doesn't mean going up to somebody and say, hey, I've been too cheap to you. You need, like, like, you don't want to do this there's a tactful way to approach this process and not. But this is a good time to check your pricing. Like, obviously we're in a very interesting market in the sense that the market might not necessarily handle huge price increases. However, if you know you're offering a specific value and you have a greater value proposition to offer, whether that's adding that service line that we were talking about, or you get to renegotiate policies so accounts receivable doesn't keep growing, checking your pricing is super, super imperative. I know it was a funny exercise I did about a year ago. I had a client that needed a cheaper bookkeeper than me. And I was looking around town and trying to find a cheaper bookkeeper, and I realized I was the cheapest bookkeeper. And I was like, whoa, that was an interesting exercise. Like, but had I not taken that process and gone through it, I was like, what does that mean? And where do you sit in that pricing process for your business? And the whole point is, what are they getting value-wise for you? What are you offering in trade for that? I used to be so hesitant around pricing because I had my own personal programs around that thought process. But I really started realizing that it's not about the pricing. It's about the pain points of the clients that you're working with and how you can solve them for you. I work with a lot of healthcare professionals, and it's amazing to me that if you just come from a place of, I'm here to serve you and help you be healthy and feel better, pricing almost becomes irrelevant as long as you're serving the need that they immediately have. And so you're wanting to look at that point and say, okay, is this something I can leverage right now in my business to make this help me? The next, the part that can support this is the marketing aspect of this piece. I used to laugh, and you guys will probably laugh about this, but like, as an accountant, there's always contention between marketing and accounting because accountants don't usually understand the value in marketing. But the more and more I'm in business, the more and more like, oh my gosh, marketing is so, so freaking important. And so make and update your marketing to be in alignment with that value proposition that you're doing, and make sure that it's working for you. Where can you improve this process? I saw a lot of businesses during COVID cancel marketing campaigns. And those that didn't are the ones that are actually gaining market share right now, while those that chose to cancel are losing market share. And so it makes you wonder, like, is this truly an expense that I should be cutting? So this is where knowing your numbers and knowing that return on investment is so, so imperative, because what you might think is like a tedious expense, because there's oftentimes, like, I get scrappy when it comes to money sometimes, and I'm like, oh, that just seems like a waste. But then you have to do the numbers and you're like, oh, nope, that's not a waste at all. And marketing is one of those that constantly gets compromised because a lot of people don't see the value in it. But how many touches does it take for you working with a client to close them, or constantly being in communication with them to make them a better client? Because you're also moving a client not just to onboard, but onboarding from a basic client to a true valued-based customer for you. They become your walking billboard. And so marketing gets to encompass all of that. And like I said, I bring this up because we had about a good 20% of our small businesses that I've worked with in coaching aspect, not necessarily through JFS, they're like, oh, I'm going to cut my marketing budget. And I was like, oh, hold the fort. Like, is this going to serve you in the long run? So again, we're looking at long run cash flow. Yeah, we have to make some short run decisions, but if you compromise today, in a year from now, is this really going to be a compromise that's worth it? And so every decision gets to be weighed from that perspective. And then we're going to analyze to death. And so I joke about analysis paralysis, but there's some stuff that you get to dive into as a business owner that people just don't want to take the time to look at. I know I'm one of those that I get so busy and I'm like, I don't have time for that. But you get to create time for that, because your business is important. And if you have something to offer, it's your duty to be productive and offer it. Because if you choose to let your business go down, who did you cheat out of your services that you're helping them with? Okay, and so going through your profit and loss statement or your bank statement, are there unneeded subscriptions that you don't need? I had to laugh because I had a client, we did an analysis on subscriptions, and because it was $5 here for an app and $5 there, it wasn't that expensive. But by the time we did the math, they were spending like $900 a month on apps, and they were only using about $20 worth of them every month. Yeah, $900 doesn't seem like a lot maybe, but for this particular client, when we're dealing with maybe a couple $1,000s per month only, that's a lot of money. You can leverage that elsewhere. So again, review those subscriptions. Are they serving you and helping you in that way? Is this some of those costs that you can actually leverage your client's feedback on and maybe they can help support you with that process. I know in my office, my clients hope to goodness I have really solid tax software, because if I'm doing terrible tax returns, we might have a problem in my world. So like those are the types of things you're going to constantly reevaluate, the return on investment, but also the benefit of what you're choosing into. Meals and entertainment is another one I bring up because there are some IRS and tax ramifications for that, right? Entertainment, if you're a for-profit entity, is not deductible. But meals are 50% to a certain degree. Yeah, there's lots of fun little nuances with this, but I always challenge people to review those areas that might have tax consequences, because if you are having high spend in those areas, you're losing some tax benefit. Maybe that's additional savings you need for year end, especially in the year we're in right now with everything that's happening with alternative funding that might create some additional tax liability that people were unaware of. Those types of things become important. To me, and all of you know I preach this if you know me, but taxes are not a year-end function. They're a function you should be strategizing with all year long, because there's additional cash flow you could save there. By just shifting certain things in your behavior as an owner, and you start behaving more like the bigger business, you move through the Robert Kiyosaki cash flow quadrants to being a business, and you can get better deductions that way. That's how the rich stay rich that we talk about all the time. And those are the types of things you're going to constantly want to look at, because that's cash flow. Cash flow equals money for you in the long run. Nowadays, with everything that's happening for all of alternative funding, you can also renegotiate with a lot of different things. I put renegotiate interest on here, but this can be multiple opportunities. I know for one of my businesses, we just actually reached out to all their vendors that they had high volume spending with and renegotiated their accounts payable contracts with them. So instead of a 30-day like invoicing terms, we now have 60 to 90 days. So that way we can collect customer payments, all of it maybe prior to actually having to pay the bill for said, cost of goods sold piece, whatever that looks like. But this is the opportunity to shrink any of those additional expenses and work with vendors, because right now those vendors, they're still business owners. They want cash flow, but they're in the same boat you are. If they can keep customers happy, keep their margins up, they might have room for some negotiation. And debt service cost is part of that. That's interest rates. I mean, right now with all the different funding sources there's opportunities for possible refinances. There's possibilities for negotiation on some certain credit lines, and also just be aware, like, are your credit lines viable? Are they going to call them anytime soon? Those are the types of things you want to constantly be looking at, negotiating, navigating, because those are low-hanging fruit opportunities in your business. Again, if you're knowing your numbers and you're knowing how much you're spending in each different bucket, there's room to play here. Like I was mentioning, we did a contract negotiation for vendors. Like, we found that we are constantly getting all of our supplies from a certain company. Turns out they actually have a bulk purchasing program, but unless you ask for it, you don't get it. So this is one of those opportunities to where you get to ask, you get to have that whole process. Now, we've talked a lot about canceling certain things, reviewing certain expenses, and renegotiating, but I also encourage business owners to really engage your staff in this whole process. I once worked for an employer that went and cut costs on specific products, not realizing the ramification it had on the staff that was using said products. And it was a actual healthcare facility. It was a nursing home, and this was a long time ago. And by cutting costs on one product, it actually created additional work for the staff, which resulted in more overtime, which defeated the whole point of cutting the costs of the said product. So as you're going through this process and talking about subscriptions and software, do a SWOT analysis with your staff on all of it. Doesn't have to be complicated. Don't make this hard, but like engaging their feedback is going to become so important, because what might motivate them might be something that you're thinking about cutting. I know we sat down as a JFS team and talked about like software, and we recently rolled out like a new client portal process. And originally we were like hesitant to do it because I was like, I don't know, like it's going to eliminate 4 softwares for us. And we were all worried about like trying to like make it all work. But the staff, like their chief thing was like, if we choose this, we can get rid of this, and this, it saves us this much time. And I didn't realize how much time they were spending managing that process. So again, engaging them, working together as a team, coming up with this solution resulted in substantially like way cooler opportunity. And so some of my clients have gotten the opportunity to use it in the last week. Of course, we had to roll it out during tax season because why not? And it was really cool to see like the end result of that. So this is, again, you're switching and working through, oh, like this works, this doesn't. My mantra for going through the cancel, review, renegotiate, and ask process is what worked, what didn't, and what's next for each of these items. Because stuff that works, what if you can find more of what works? What didn't, that's great, acknowledge it, don't beat yourself up about it, but what's next with that process? And figuring out how you're gonna move through all of your different expense line items. And then from there, my recommendation is to take this even further. So you've done your internal, your personal evaluation, you've done the business evaluation, you've got your team involved. Let's bring your external team in. This is your clients. So checking in with your clients, looking at the client relationship process that you have with them. We do a lot of check-ins with our clients. I mean, we're constantly contacting them and saying, hey, this is the update, this is what's going on, and getting feedback. Like, we got lots of feedback about how bad our old portal was. I didn't realize how bad it was until we got a new one. But like doing that process really helped like our clients feel way more value because they felt heard in that process. And by them feeling heard when it comes to selling your value proposition, possibly having to increase your prices, we're in alignment. They get what I'm offering them. And then you can take that relationship, and as long as you're working on harvesting this relationship and not abusing the process, who knows, you can explore a referral program with them. I have found that serving my clients well and being open to communication, asking for feedback, working together as a team, we're a team rather than they're like my client, has actually created more business for me, whether it's from them per se or from friends of theirs, than just by saying, oh, they're just a customer, just a number thought process. I just read a book on relationship and how you work and harvest those. And the biggest thing you can do, again, during this time in pandemic is reach out. I mean, we've all been in opportunities where you might be socially isolated, sitting at home, working from home, and a lot of people just are like craving that human connection. Why not leverage the time now to do it? Because what you want to do is, this can be part of your marketing strategy. By having those constant trips and communication, you're top of mind for them. You become that resource for them. And it can seem silly. You might offer, I don't know, a small widget, but like, hey, one day their kid might be crying in the background for said widget. And you're like, oh yeah, that's right, so-and-so does that. And it becomes top of mind for them because you've constantly reached out. So again, checking with your clients and leveraging them as a team. I know during this process that we've gone through in the last couple months, my clients have become some of the best coaches for me in my business. It's not even funny. I mean, I have a client that constantly checks in, is like, all right, how you doing? I did my workouts this week. How did your workouts go? Just holding me accountable to taking care of me. And by doing that, oh my gosh, like my value for that client is more than just a client business relationship. They're a friend of mine. And so this is the time to leverage that, because that's cash flow. When you have happy customers, happy clients, and those working relationships, that becomes lucrative. Money is attracted to happiness. And so by checking in with your clients and creating these strong relationships, it's amazing what you can attract that way. And I mean, I don't want to get into the woohooery here, but like, to me, that is like so imperative from a value statement proposition. And then the next thing is, so you've checked in with your clients, you've got these great relationships, you've analyzed your income, you know your expenses, you might have cut some expenses. Then you want to take and review your month-to-date reports. I always like to do month-over-month comparisons. And it's been interesting to do year over year, especially because of COVID, because, there's some anomalies, but I still think there's value to it and there's value to trends, okay? Because you might be trying to hold a certain status quo while you're working through this whole process, but at the same time, by reviewing where you were at prior, I think you'd be surprised about seeing some growth that you've made that you didn't think you did. I had a call with my business coach or personal coach this last week, and she actually walked me through my last 8-month timeline, because I was kind of feeling like, oh my gosh, like I just ran the marathon, it's tax day tomorrow, like what am I going to do? And she walked me through the last 8 months, and what I thought I had created versus what I actually created were night and day different. And I was amazed by the results, because I had done all these little steps every day, and I didn't see like anything as a magnifying huge step other than maybe moving my office location, but like nothing was huge, right? Until I started doing that process. And so reviewing your month-to-month reports and reviewing your year over year might show you some opportunities that you've created and celebrate those, or opportunities that you get to still step into. I know I have found some great stuff that I get to step into, which can create more cash flow to the bottom line, or create a different investment strategy for me. So again, reviewing those processes is very important. And then again, continue to forecast. In a lot of my other cash flow classes, we talk a lot about budgeting. And to me, budgeting is so, so important because again, it's telling your money where to go. So continuing to forecast your projected income. I like to create like a variable budget or a flexible budget, depending on if you're using an accounting term or not, that kind of you can go in and plug in and say, okay, here's, if I produce X, here's the amount of income I'm making. This is the variable cost affiliated with said income. So if I have 10 widgets, it's going to cost me this many dollars, and selling 10 widgets gives me this much revenue. And then I have all my overhead costs. I create this spreadsheet, and then I can go in and make tweaks to it. Especially in an environment where we're at now, where we have no idea what's going to happen over the next 6 months. Yeah, you can still have your targets, and I highly suggest not ever getting rid of those regardless of what's happening economically, but then also have like a flexible budget you can play with. Like, what happens if I only hit 80% of that? What happens if I have to do this type of assumption? And kind of create an assumption model based off of that. So that way you know where you're going to end up. By doing this whole process and coming up with a forecast, you might again come up with some new service lines or offerings. I know for me, when I did this process, I started exploring other budgeting options to find ways to like create cash savings without me really knowing, but working within my behavior. I'm a big proponent of programs such as like Dave Ramsey or Profit First model or things like that, because all of those work within the normal human behavior, the bank balance spending kind of thought process. So if you can put money aside out of every time you get paid from a customer, you don't even think about that cash reserve that's sitting there. And before you know it, you have a reserve that can pay your taxes, that is there for a rainy day fund. If something happens, you have cash flow available. And I suggest you build that in your forecasted projected income model. So again, if you get paid $100, you spend 50 of it on costs, what are you going to do with that other 50 bucks? Give that $50 margin a job. And that, yeah, it might be partly paying you. That's great. That's part of the job. But if you have excess, give it a job to go to a savings account or, there's lots of different things you can do with it. But again, creating that pocket for you to have set aside. And as you're doing this forecast, talk to your customers again. I know I'm constantly asking my customers, where are you at? Where's your business going? Because that can then turn into, okay, that helps you figure out, are they going to come back before the end of this year? Or is my widget a one-time purchase? Do I need to add some sort of maintenance to that to keep them coming back and keep that relationship moving? And again, that all affects your projected income. Another thing that we just went through with this whole forecasting process is we're going through the Profit First certification as a firm, and hopes to be concluded here in the next couple weeks. And going through that process, we've realized if we can create a pocket for like computers, it never fails that my printer dies during tax season, or like a drum will go out, like a very expensive part. So we actually created a bank account that just money goes in there, like $25 like a month goes in there. But like by the time tax season rolls around, I have that reserve to replace that drum. It just never fails. And so what can you do in your forecast? Again, set that cash flow aside over the next 6 months. So that way, you're hitting your 1-year goal, and then you're hitting your 5-year goal. Again, building that reserve process for you. And then from there, once you've got the forecast built, you've leveraged your clients, you've analyzed your income and expenses, start reviewing this, compare this, and determine what you need to shift into. And then leverage your team. In prior sessions that I've done with different organizations and my podcast, we talk a lot about your team and your external team. To me, team is so important when it comes to cash flow, because you don't know what you don't know when it comes to spending and growth in your business. And so once you've done the analysis personally, have somebody review it. And it doesn't have to be any but like formal process. I have so many business team members that have helped JFS become what it is for me, that this is where your opportunity as a business owner, hey, I've done the dirty work, but another set of eyes could really serve me right now. I pass my financials to other people all the time. They're like, hey, did you know you can do X, Y, and Z? And I'm like, oh, I never thought of that. And it's because they're coming from an outside perspective. So take this information, all this work, and bounce it off somebody. I know during this Western Slope Startup Week, they have mentor calls. They have all these different tracks you can do. These people could be your team members. I know I pick Brian's brain all the time on books to read because that man's a genius when it comes to business books. And that helps me get to the next level in terms of my learning. I found pillars in my community I call up all the time. All right, you've done this for 30 years. I'm in year 2. What do I need to do about this scenario? And bouncing that financial information off of them because you might not have gone through this before. Say you're going through a little bit of a tight spot in the business. Contact somebody that's gone through a tight spot before and ask how they navigated it. There are so many resources in this team process that you can leverage to help hold you accountable to your goals in cash flow, but also might show you opportunities that you didn't even notice. I know when we do consulting around cash flow with our current clients, oftentimes I'll think of something that they didn't realize that they could do. Or they'll be like, oh, wait a second, well, does that have this implication or that? We can really dive into that together and work through that process. So again, it's just really, really cool to use your team to ask those questions. That's why they're there. That's why you built those relationships in the last slide that I talked about, because you can ask them for those questions. And again, if you don't have somebody you can talk to about money, I highly encourage you to find somebody. Money is often considered a taboo topic, which I have no idea why, because it's just a piece of paper that we put our own programs around. But in my opinion, if you have to find somebody you can say, hey, dude, I'm like crunching on money. I don't know what to do. Who can I talk to? Go find somebody that you can. And it needs to be somebody you can trust and open up and like air your dirty laundry to. So that way, you know, as a business, how you can move forward. I know I've had quite a few heart-to-hearts with my coach, and I'm so can't emphasize the value I put on him, because he flat out tell me, hey, Kelly, that was a really not profitable decision. And, you know, I need somebody to tell me that. I'm an accountant. So oftentimes I get in my own blinders about it. And then from there, you're going to use that team and have them continue to help you check it against budget. It's that accountability check. I have a good friend of mine that I share my personal savings goals with all the time. And she is like ruthless when it comes to calling me out on my own crap. Because I'll be like, oh, you know, I could have saved that money, but I chose to go do X with it instead. For those that know me, I chose to buy a horse or something, I don't know, something like that. And they'll flat out she'll be like, girlfriend, you told me you were going to have by such and such date this much money in the bank. You need that kind of an accountability partner when it comes to cash flow. To me, it is like, if you can get that, it's amazing what wealth you can create just by leveraging accountability in that process. So again, checking the budget, comparing it to what you've already dove into and analyzed, and then leveraging your financial team's expertise around the cash decisions that you are making. Because to me, if you start accumulating the savings, then you're gonna need a whole nother level of teamwork to help support you with what to do with that savings. How are you going to invest the money? How are you going to make the money work for you? There's so many different opportunities you can then take and build wealth with, because cash flow is a wealth strategy game. The end result of this entire game is to create wealth, not just immediate cash flow. And so as you're building this business, keep that legacy in mind. How I always like to think of cash flow in terms of the bigger picture is, here's my small goals, but what's my legacy plan? If my legacy plan is here, what steps do I have to take here to get there? And what if I can accelerate some of those steps and then duplicate the process and help somebody else create their legacy within mine? And that's how you can take cash flow to a whole nother level when it comes to wealth building. And so in terms of this whole process, you then come up with your budget numbers. And then from there, again, you can start working with your behaviors within it to take it to the next level. So for an example, to kind of give you a case study, we did a whole analysis like I just shared with you. We analyzed the income and expenses of a business. We figured out where they were, and then we realized financially their business wasn't going to last longer than a year after doing this whole process. And we talked with their clients trying to figure out where the end result is for their budget and where they wanted to go with everything. And knowing that whole process, we couldn't find an immediate solution for cash flow. And I know a lot of people are feeling this right now, like, how do I come up with an immediate solution? So what we started to do was create some additional accounts, which is really hard to do with a bank if you're losing money and you owe the bank a ton of money, but it is doable if you have a really great relationship with them. So going back to the relationship process, again, very important. And we just started putting like 1% of client payments there. And we were able, within a year of that behavior shift, just by 1%, to be able to renegotiate debt service cost and refinance, which ended up creating some more cash flow for them. By doing what I call profit first in a very small way, by shifting the mindset of that client, we created some incentives internally, which increased productivity as well. So for an example, the wife was his bookkeeper and biller. And she was very frustrated because she gave up her career to help her husband's business in this, but there was no cash flow from it. They couldn't get out of it. But by shifting and putting 1% in the savings account for debt service, and we did 1% in a what I call a profit account, where they can take a distribution quarterly for their performance. She got a date out of this little 1% profit account because it was enough for her and her husband to go on a pretty fancy date once a quarter. And it was amazing, that motivation for her, because for somebody to give up their career to help him, it was amazing what happened. She was in charge of sending out invoices to their customers. Well, because she got a date now, she sent them out quicker and money started coming in quicker. And then she started booking that money and paying those bills differently because she knew that cash flow equaled a date. And so again, shifting this behavior ended up saving their business. They went from losing $800,000 one year to having a positive $200,000 bottom line the next. And it's purely by analyzing their expenses and their income to a very, very deep level and creating and figuring out what motivators there were to get them to that next step. And again, it's the profit first methodology that got them there. Any questions about what I've gone over so far?
Doesn't look like we have any questions coming in yet, but Mara did share the link to the mentor office hours that you mentioned.
Okay, perfect. Awesome, thank you.
Oh, we do have a question. Oh, it's from Mara. How do you figure out which mentor to match up with? Let me find you.
I'll go off mute real quick and say there are over 40 mentors, and if you click on the link to Calendly, it has them all out there, and you can read their bio and then look at their availability for the different sessions.
Perfect. So yes, get on with a mentor. Why not? It's the perfect time to pick their brain. So I want to open up before I go any further in my presentation, and I want to ask anybody on the call, and anybody can jump in. What are some of the things you're seeing right now in your business or personal life around cash flow that you might be struggling with, or even just might be seeing in general? What is some of the thoughts you guys have at this point? Don't be shy.
I'll add something. I guess for us, this is Brian, by the way. I'm looking at our primary product that we sell and trying to figure out if there's different ways that we can increase the price, and which includes increasing more value and going after bigger clients. So that's something I've been processing a lot, just trying to figure out, where we can go for bigger clients and get more money for the same amount of work, basically. So it's something I've been processing.
I want to challenge you, because I can challenge you because it's you. What are you looking at from a value proposition or value piece that you're seeing to help you increase that selling point?
So one of the things that we have a software company, and we've been working, when we first started, we had a smaller client. So we work with co-working spaces all over the place. What I'm thinking about and processing is targeting co-working spaces that are doing more revenue. So larger co-working spaces than we've worked with in the past. And instead of selling everything a la carte, just doing a larger all-inclusive package, so that we can have less clients and provide them greater and greater value at, a price that would be more expensive than what we're charging right now, but still from a ratio percentage less because they're bigger clients, if that makes sense.
Oh, no, it makes total sense. We just did this analysis as well. And this is why I mentioned the income and the service line aspect earlier in the presentation, because sometimes that a la carte or those smaller items that you are selling can actually cost you more in the long run because of there's so much maintenance for a smaller scenario. And so the challenge that I often tell people is look at that value proposition and what can you can you lumped together to be like, I'm going to do all of this for you and serve you. Yeah, it's going to cost more, but in the long run, like you become more of it's more of like a partnership rather than just a client buying something small from me in the long run. Like it's less maintenance, but yet at the same time, it still serves on a great scale.
And they would be much more satisfied clients because they're not trying to pay for everything. They have the whole service that we offer. So, they would be able to get everything that we offer instead of having gaps within the areas that they need help with.
That's awesome. It looks like Kaylee might be raising her hand. Do I just, how do I?
Yes. I think, can you hear me?
Yes.
Awesome. Thanks, Kelly. This has been great. I am in a brand new sole proprietorship offering consulting services. So the amount of expenses is really simple, very low. And I'm curious with this change in cash flow personally from always having been an employee of a company to now bringing in a lot of revenue, any strategies for putting that money to work that is a little extra, ahead of those quarterly tax payments, et cetera, but like just now having a bit more cash that can be put to work. I'm curious to dive in more about the ways to make that work for you.
Oh man, there's so many ways you can make money work for you. That's a great question. So a lot of it's going to determine on your personal goals. So I would challenge you to first write out like what your personal long-term, like the goals for you. And then you're going to want to find somebody that can support you with each of those aspects. So for me, like when I first started and I had extra cash flow, I'm like, I knew I had some investment goals. Like I wanted to have so much in assets by a certain age, that kind of process. So that drove me to look at different types of ways to have my money work for me and different investments to make with that money. And it's going to be different for every person because your risk tolerance level is going to be different than my risk tolerance level versus Mara's or Brian's or anybody's. And so I want, encourage you to kind of know what you're looking for, like long-term, and then seeing, can you leverage, a financial advisor to help you with investments? Can you leverage a real estate investment professional? Can you leverage somebody with another business? Is there a way you can shift your business model to even help you save better with taxes? And some of those different things that I just listed can actually create tax savings, which creates more money for you too. So that it's this constant cycle. The biggest thing is start by analyzing your business with like an accountant and having them also provide you guidance to talk with the different players of where you want to go. Like for me, I'll play in the stock market, but it's not my jam, but I love real estate. So I chose to engage some different investments from that perspective. I also love software, and thanks to Brian introduced me to somebody because I pick his brain, like I said, often, and I developed some software that's going to result in an investment for me. And so there's just different ways you can get that money working for you depending on what your end game is. And also, again, just make sure it's in alignment with your bigger picture strategy. And you can use your business to do this. If it's in alignment with your business, you can run it through the business, or you can create a sister company and set it up accordingly to help you with that process. There's a whole slew of different ways to do entity structures and asset protection to be able to get you there. And that's where you're going to want to have a good team to help support you. And that includes a financial and legal team. Does that answer your question?
Yes, definitely makes me feel better too, because I've got a financial advisor and an accountant, so I'll pick their brain about it too.
Yes,
and noticed in the description too about kind of paying yourself and figuring out those right benchmarks, so I can lean on them to figure out, how much goes into which buckets or envelopes, as you mentioned.
Yeah, and so you brought up paying yourself, because that's kind of where I wanted to go next. So I'll go ahead and just jump there. It's a great segue. So in Profit First methodology, which I've been doing in my firm for 3 years now, and I'm going to tell you, light and day difference, life changer. What that mentality does is every time you get paid, so say you get paid $1,000, I automatically put 5% in my profit account, 15% in my tax account, 10% in the Pay Kelly account, and then the rest goes to operating account expenses. And now I've got more than that, but that's down and dirty quick calculation for the sake of this class. But by doing that, my 5% profit account allows for me to get a quarterly bonus every quarter, or my shareholders get a quarterly bonus, because it's more than just me in my scenario. But you as the business owner, if that's how you roll, that's your profit account is kind of like your distribution account. So after so many months, you've busted your tail, you put your butt on the line owning the business, you get to take that distribution as a bonus. The 15% I put aside for taxes. Again, you're going to want to work with your accountant to figure out those, what's called TAPs. It's a target allocable percent based off of a profit first model. You will figure out what your percentage needs to be for your business structure and your taxes, but then the taxes come out automatically every time you get paid. And that directly results in not having to come up and scramble for taxes at the end of every quarter. And then if you pay yourself the 10% right away, you actually get a paycheck right off the bat. And that means you have to operate in a smaller margin. The example that Mike Michalowicz actually gives in the Profit First training, if you go through his deeper dive training than just his book, is teenagers and eating food. Has anybody on this call, if you can raise your hand or do the little emoji icon of raising your hand or clap your hands or whatever. Has anybody seen a teenage boy ever eat food before? I don't see any thumbs up. I see a thumbs up. Anybody gonna do? Okay, I got a couple. Woohoo! Some people are participating. So if you've ever watched a teenage boy eat, they eat a ton. Like my cousin would stare at my plate until I wouldn't eat, like so that way he could have it. So what Mike Michalowicz started doing was breaking plates in his house until like they only had the small plates left. And it was funny because the same thing happened every evening. They only ate one. It was bowls in this case. They only ate one bowl of cereal. They never ate more than one. And so he just kept breaking the bowls until they were smaller enough to where he actually could get a box of cereal to last like 3 days instead of go through it like once a day. And so you essentially, by paying yourself first, by paying your taxes first, are operating your business out of a smaller bowl. And so that's where you're going to know what expenses you get to start cutting first. And so because you're operating in this small bowl, all this excess cash that you're building outside of the small operating percentage can become working cash for you. That's how you pay yourself first. At first, it was like the scariest thing I'd ever done, switching, because I had been in operation for a while, and I was like, okay, I'm going to switch to this profit first thing. Here goes nothing. How do I operate off of smaller? Well, you start with small percentages to start. It might just be paying yourself 1%. If you've never taken a paycheck before, start with a small percent, but your goal is to set targets with your financial team of where you want to be, and you're going to slowly every month or every quarter increase that percentage. And you're going to want to figure out what that timeline looks like. And that's how cash flow works. Over time, you're going to want to set up your long-term plan, but grow like those targets, but then grow your savings accordingly. I always kind of come back to the philosophy of like, think and grow rich and those types of thought processes in terms of persistence. And so in terms of cash flow, it's the same concept. You get to be very aware and very persistent every single day about your money. And like my friends give me such a hard time because that's like my brain is always thinking in cents of dollars. And it's not because I'm obsessed with money. It's just because that's how my brain like works. And so if I can work within my brain power, what if I can create wealth? Because it's not for the sake of me having the money. Maybe I want to create a foundation. Like my end goal is I want to create this online kids educational platform so parents know how to teach kids about money. Like that is like my legacy dream that I'm going to leave behind. Well, what do I need to do to create that wealth, to create that? And that means paying myself. Like if I cheat paying myself, I am not practicing when I'm telling parents to preach to their kids, right? So you as a small business owner, as you're growing, that's how you're gonna start paying yourself first and get those behaviors as soon as possible. Like if you talked about recently transitioning from being an employee to a business, now's the time to set that up right away. Because if you set it up right away, in the long run, it'll pay you tenfold versus like trying to go into it after the fact. I mentioned that case study of that construction company earlier. I mean, implementing profit first after 30 years of behavior is very difficult, but it saved them. Okay, and so I'm emphasizing profit first because I know it, but there's so many methodologies that are very similar, and I highly encourage you, again, working with your accountant and financial advisor to find that alignment for you and what works. But I've ended up doing this to all my like personal household stuff. So I have the same bank account, like separate bank accounts for my rentals. And I do the same cash flow mentality for like my personal household. And it's purely because I want to create long-term planning and wealth out of that. Are there any other questions or things people are seeing and have questions about around cash flow? Because I want to make sure I get them answered before we conclude today. I don't see any. All right, so the one thing I want to conclude with around cash flow.
We have one question came in.
Okay.
Any tax implications for paying yourself bonuses as a sole proprietor?
So it's not, yes, Yes. So if you are a sole proprietor, you are not on payroll, but you can take a distribution. So just make sure you work with your accountant to take it correctly and pay yourself correctly in the right form. So your entity structure dictates how you get paid, and your operating agreement dictates how you get paid. So just make sure how you distribute money to yourself matches how it's supposed to for your entity type. As a sole proprietor though, taking a bonus just means pulling money out of your bank account. But if you're a different entity structure, you would need to work with your accountant to make sure you pull that money correctly. So great question. Very good question. So again, this is where that whole team emphasis comes into play. It's so important to have people out there that have resources. We have so many on the Western Slope in terms of free resources to leverage right now. It's not even funny. I mean, first of all, we have this Western Slope Startup Week, which is just awesome because there's a lot of different speakers on here that I highly encourage you to network and get to know. And then also we have resources such as our chambers, the incubator centers, the SBDCs, the different region 10, things like that. Leverage those resources because they all have educational classes and people that specialize in this, and they give coaching. A lot of them have coaching as part of the process to help you become a stronger business owner. And cash flow is all part of it. Cash flow is kind of like the base of every business. And so that's why I'm constantly talking about it, because if you have no cash, you have no money. Like, you can't function as a business. So you're constantly wanting to shift and make sure that that's available for you. And again, you get to be creative, especially now as we're going into this unknown. I know today Colorado passed a law about the mask requirement rule, which could affect some people's businesses. And so knowing that that's coming down the pike again, it's going to be about holding on to your assets and leveraging them in a way that serves you in the long run. So again, don't take decisions today don't be very drastic. I know a lot of people, when PPP and all of that kind of stuff was rolling out, instantly jumped on that. Do the analysis, know your numbers, make sure it's in alignment with the long-term plan, because again, these short-term decisions affect you in the long run. I've seen it backfire many, many times over the years. And so again, this is a kind of like a buy and hold kind of game in terms of cash flow. The whole point is you're building wealth over time. There is no such thing as get rich quick, unless you're one of randomly very lucky and hit it crazy big in something. But for the most of us, it's going to be a long-term wealth building strategy. And you're going to want to leverage people to do that. So to leave you with this, check your income, check your expenses, know your service lines, review your assets, leverage your clients, set up your projections, and continue to check against those projections all the time. If you want any more of these free resources, you can go to jfsconsultingco.com, which I'll share that here in the chat in just a second. And we have a free 30-day cash flow challenge that gives you step-by-step what to do with your cash flow for 30 days on how to do everything we talked about in today's call. And we also have 2 podcasts under the Extreme Movement podcast that explain this also in detail. So I highly encourage you to really jump in, get to know your numbers, really from a detail level, know exactly where you're going as your business, and give every dollar a job. So thank you guys for joining with me today. I appreciate it.
Thank you, Kelly.